Hey there, welcome back to JDX Forest Academy. Here in this tutorial, we're going to dive into the second part or the B part of our tutorial on market structure for all beginners. And of course, when we say for beginners, it doesn't necessarily mean that there is another part of market structure that is for advanced traders. Yeah, it is the same thing that every one of us on the chat does. And so, while on this call, just know that we're going to be doing the exact same thing. In our previous tutorial, in our previous video, we did talk about the type of structure we have. We said we have trending market, and then we have ranging market or consolidating market. In the trending market, we said we have bullish structure, and then in the we also have bearish structure. We said that bullish structure used to produce higher highs and higher lows, while for bearish structure it produced lower lows and lower highs. So stuff like this. But then the previous class was more of ideal movement on the chart. So let's get to see how is this applicable in real life. Okay, just right here we have GBP USD, and then look at the chart. I am on 30 minutes time frame. Look at what the chart is doing. Okay, so the chart is printing candles in this form and way. Look at how the candles are being printed. Now you could see that from common sense, this looks more like what we discussed about to be forward for uptrend. So yes, the gold is trending, and the trending is what uptrend. We are bullish on gold. So look at, I just mimicked the movement pattern for gold, and you notice that it is not same as what we did earlier in quote. The initial diagram we have that suggests a movement that kind of very nice. That is, this is in real life. That is not how it is. So we definitely expect stuff like this in real life for a repair. Okay, so gold is bullish. So we have here we have our low, we have our high somewhere up here. We have our higher low somewhere here, and then another higher high for a bullish structure. All right, so in this case, we can say, yeah, gold is bullish. Okay, let's look out for another pair to see what another pair may be doing at the moment. Let's check out CAD, GBP CAD. Okay, let's step up a bit. Um, Now from what we can see, let's increase this. This is on this 1 hour time frame on CAD. Now, when you look at the bigger picture, you could see that CAD, that's GBP CAD, is bearish at this moment. Of course, down till now is bearish. So what can we see here? We can see here that okay, let's start with where the market started here, any of these points. We have this level, and the market produced a low here. It produced a lower high. Could see that this level is lower than the previous one. It broke down, came to this point, produced a lower low somewhere here at this point, and then retraced somewhere here, and from there it still produced another low here. So yes, one could say that this market is trending down. Yeah, it could still produce one, and then where we are currently. Now let's try to mimic this movement and see how it is. So we didn't take note of this earlier. Look at this, lower low, retraced, came down to this point, retraced, came down to this point, retraced, came down to this point, retraced, and then we are down. So what can we see? Look at the movement. Now you see that it is not, in quotes, the ideal version, which we said in our previous class that for downtrend you have something like this. And of course, when you're doing it for downtrend, it's going to be beautiful. But the ideal way is that the market really doesn't work that way. Okay, so this is this for trending market. Let's see if we can be able to spot out a ranging market. We said in ranging market, you really cannot tell the direction of the market. Okay, let's look at this very point, what the market was doing here. Okay. Okay, look at this. Look at this at this very point, what the market was doing. Now, you notice that we had something like this, a movement down here, retraced. Oh, fine. It's like we are going down, but before you know it, we are up. We are back to the same level, almost exact same thing happening at the same level. Let me end there. So if I were to draw from where this started to where this ended, you see that all of this has just been happening within the same region. Okay, now, but then let's get to see if we will see something more clearer. Let's see if we could see something more clearer. Um, let's see gold. I don't think gold is consolidating, but let's check it out. Okay, this region here could be a good region for consolidation when we step inside of the trade. Okay, let's see if we can explore it. 5 minutes. Sorry, let me come back. When was this? This was on the 26th of August. So let me come back to 25th and then go to 25th of August. It should be August 25th. All right, this is August 25th within 5 minutes. Sorry, time frame. So look at what's happening here. So the market that started somewhere from this other region, it started down, retraced down, and went up, went down, went up, went down, went up, went down, went up, went down again. Now you could see that at this point, one would be thinking, oh, we are going down, but before you know it, it's now looking at, let me mark the region. This region looked as though we are going down. Before we know it, this other region, the second region, moved as was behaving as though we are going up, and then again we still have this other region in within this place, this point, behaving as though we are going down, sorry, we are going up, and again another a spike as though we are going to go up. So this is the kind of scenario where we say that okay, fine, the market is actually doing some sort of consolidation. Okay, there is no clear path as to whether the market is going up or is coming down. So at this point, one if one is to take a measurement or mark the regions, you could see that there is this kind of reactions both up and down. So this is the case where we say the market is ranging. I hope you get this. Okay, see you in our next video. Stay blessed.